Hey, hello, everybody. How you doing? I'm relaxed. Maybe I'm tired. I don't know, but I'm relaxed. So it's Fed Day today. I just checked the CME Fed Watch tool. 95% probability that we will see a 25 basis point rate hike today. I think it's a done deal, so that will happen. I'd like to say that the markets are expecting this not only because of this Fed Watch tool and where the Fed fund futures are trading, but this, it's been talked about, and you have a lot of mainstream economists saying, yeah, it's time for the Fed to move on this. And the Yellen Fed, they need that confidence factor. They need that backup. They need the support of the markets. They need the support of their peers and their colleagues. So when they hear that, I'm sure they're going to go ahead and do it. Now, I want to talk about something which was the this morning's CPI, Consumer Price Index, now rising at the fastest pace in 5 years, okay, 2.8% year over year. Now, everybody out there that you have, spoken to or listened to, or if you've read their comments, with the exception of myself, everybody out there, and many of you among you would say that rate hikes, they quash inflation. They subdue inflation. And I've been the one telling you that rate hikes drive inflation because they are price increases. I've told you to think about rate adjustments as price adjustments. Very simple. Rate cuts are price cuts and rate hikes are price increases. And we can go back to that very first rate hike. I was literally the only one. I know there are some other people in the MMT community who understand this, but I'm clearly the most vocal person out there, and also making these predictions and making bets in the market on this understanding and on these concepts. And I said even before the December 2015, the very first rate hike, I said before that you wait. Once the Fed starts raising rates again, once they shift monetary policy back to raising rates, you're going to see inflation take off. You're going to see gold rally. You're going to see commodities rally. And that's exactly what has happened. And I know there's still many among you who think I'm wrong, but that's fine. And I'm telling you right now, we're going to have a third rate hike. The rate of inflation is going to increase. And what's really interesting about this is that the orthodoxy, the mainstream of economics, they basically don't understand this. You have the Fed itself, the members of the FOMC who believe that they are working to hinder or hamper or tamp down the inflation rate by raising interest rates, when indeed all they're doing is raising prices. The cost of credit, which is what's affected by the interest rate, is reflected in the cost of all goods and services. So when they raise the interest rate, they're raising prices. And we have to also say that it is a fiscal expansion. The government is a net payer of interest, and so that's a fiscal expansion. So you have these factors working. They don't understand it. Now, I am telling you this. This is a fact. This is not Mike Norman made up. So that's point number one. Point number two, gold is in a stealth bull market, and nobody is in it. It's a fantastic, you talk about low-hanging fruit, and it's interesting if you just want to talk about behavior, people don't want to get involved. It looks shaky to them. It looks unsure. It looks risky. It looks like it's not going to happen. It's the exact opposite of the stock market right now, which looks like it's going to go up every single day and that there is no risk whatsoever, when indeed it's a reversed situation. The stock market is very risky right now. You have inflation, which means that the future value of earnings in real terms is diminished. So people are paying more and more and more in real terms for stocks that are going to return less and less and less. And on the flip side of that, you have gold, which is very, very cheap because it is an inflation hedge. And what I find fascinating and really humorous and comical is that all the inflationistas, I like to call them, all these people like Schiff and Mark Faber and Jim Rogers and all these crazy fools who always talk about gold as an inflation hedge, they're silent. They're saying nothing. They don't understand it at all. Okay, they don't even see it. So you have that. And then the next thing that I've spoken about is that the dollar, and the dollar is peaking out here. It is going down. Inflation is not good for a currency. You literally have people saying, I want to buy the dollar because there's a rising inflation. When inflation means, it literally means your money is worth less, but they want to pay more and more and more for that dollar. I mean, it's very, very comical to watch. So, which is fine for me. I hope they keep buying it because they'll ultimately be the ones who will be dumping it out at some point way, way, way down the line. I am shorting every dollar rally. That's not to say today, after this rate hike, we could see a pop in the dollar. And we saw it last time, even though it was widely expected. So I would not rule that out. And I would not rule out selling in gold today. But it's a fake out. It's a total fake out. So you have all these things going on. You had yesterday, Trump signed an executive order mandating cuts at all the federal agencies. Big, big cuts. Big, big cuts. Okay? We have not had a tax cut yet. We have not had one dime of infrastructure spending yet. But we're going to have big, big cuts. So got to see how that plays out. Right now, fiscal flows are still pretty flat year over year. Let's say they're growing at about 0.5%, 0.6%. And there's a very close correlation between the growth in fiscal flows and GDP. So I'll make a prediction right now. I know the Atlanta Fed is saying that first quarter GDP is 1.3%. I'll make a prediction right now. I'm saying first quarter GDP will be about 0.5%, between 0.5 to 0.7%. That's what I'm going to say. So that's where it stands right now. We got the rate hike this afternoon. As you know, markets are going to jump around. We got the oil inventories that came out earlier. I will give a breakdown of that. By the way, I sent out an email to all MMT Trader subscribers with a breakdown of that oil inventory data, demand within there, the supplies. If you want to get that email, go to my website, Pitbull Economics, and click on the tab that says get the 30-day free trial, and I will send you that email. And of course, you'll get the report, and you can get all the back issues. So that's it for now. I'll see you guys later. Bye-bye.